Live from Music City, Nashville, Tennessee. This is your motivational, sensational, inspirational, educational, keenly awaited, highly anticipated edition of Day Trading in Real Life, numero quattro. Ladies and gentlemen, boys and girls, legends and legendettes from all around the world, investors, stock market fans, Twitter followers, and YouTube subscribers. How are each and every one of you doing tonight? Type in a 1 if you can hear me and see me. Okay, it is Friday night. The people who are here are dedicated. Congratulations, Jeff, Luke, how's it going? Walt, Edwards, Joshua, Nikhil, Avery, Johnny, Miss Francoise, how are you? Thanks for being here in every single class. I appreciate it. Marta, Gary, how's it going, buddy? Gary from Texas. Welcome, my man. Appreciate you being here. Dedication, ladies and gentlemen. That's what separates the successful from not the successful. Taking a day trading class on a Friday night. I love it. Let me kind of give you an idea of what tonight's going to be about. So tonight we're going to review a little bit of what we talked about in class 3. We're going to look at some real life examples. I'm going to talk about what type of gaps you probably don't want to trade. And then we're going to work on creating a day trading plan. I'm going to give you what it looks like, and I'll kind of give you an insight into how to build one. I'm going to give you some really cool announcements and some tips on the best way to use the announcements that I'll be talking about later. And then we'll wrap it up with any questions you have. It's going to be pretty much about it. So I think we're looking at about 77 minutes approximately. And again, if you're watching this on a recorded version there in YouTube land, hello! Hello there! Thanks for being here. I appreciate it. Make sure to click that subscribe button. Let's do this. So, ladies and gentlemen, on NVIDIA, ticker symbol NVDA, this was a big deal today. A lot of traders, a lot of people focusing on this particular stock. Let's do a poll. What type of gap was this on NVIDIA today? What type of gap was this on NVIDIA? And we're going to talk about this in more distinct detail. Interested to see what you guys think about it. All right. Annie says, Jeremy, you cracked me up. Love it. Thank you. That's I'm rarely funny, so thanks. Thank you very much. Adam, what's up, buddy? Hope you're doing fantastic. All right. It's going to keep this poll open for 5 more seconds. 5, 4, 3, 2, and 1. All right, closing the poll. Going to share the results. So pretty even, but we definitely have a majority vote. 66% said bullish retest gap. That is absolutely correct. Tom, wait about an hour and I got you. So on this particular session, it was a bullish retest gap, right? We gapped up. It was a white candle that gapped up and we traded down. So what we have to do when we're looking at sentiment, right? We have to ask who is doing what and how are they feeling. So if we're looking at NVIDIA, ladies and gentlemen, this was yesterday's candle. Remember that the prior day candle is oftentimes the most important. How is everyone feeling on NVIDIA yesterday? Go ahead and just write in whatever your sentiment is. There's no right or wrong answers specifically, right? This is a judgment-free zone. What do you think? Scott says they feel confident. Jeff says they feel happy. Brandon says fantastic. Sharon says woohoo. Avery says going up. Nikhil says excited. Luke says hi. Chris says bullish, happy, smart, rich. Everyone's on the same page. You're all correct. They're all optimistic. Were there people who bought yesterday? Yes or no? Were there people who bought? Yes, absolutely. There were 100% people who bought yesterday. The trend is 100% unquestionably bullish. So let's pretend that NVIDIA did not happen. Obviously it did. Let's pretend it didn't. If you were NVIDIA yesterday, let's say you had bought, doesn't matter, shares, call options, doesn't really matter. Let's say you were in NVIDIA bullish yesterday and you got a gap up today, what would you have done? What would you have done? Exactly. You would sell and you would take profit. So is it any real shock that that is exactly what happened today on NVIDIA? I don't think it's really that big of a shock. It gapped up to an all-time high, ran a little bit, and then tanked. Gapped up, ran a little bit, and tanked. Marta says it was way too overbought. Exactly, just too many buying. Too much buying. Stocks don't go up forever. You have to keep that in mind. At some point, it's got to come back. This is a healthy pullback. This was expected, and this was anticipated. Now, the better question was, how could you have traded this one? Well, if you were in the trading room with us this morning, this was a stock we were looking at all day, and the only time I was thinking about taking this trade bullish, the only time was right here. So it was retesting. I got a really good candle, and I thought about going bullish. But there was one candle that told me to wait before I took a bullish trade. Just one. I want you to look at that candle and see if you can spot the one I'm thinking about. See if you can read my mind. I'll give you a hint. It happened before the candle that I'm pointing to. So we were looking at NVIDIA all day, and I said to myself, folks, this is a bullish retest gap. I really, truly do not think I'm going to play a bullish today. It's too high. Who's buying up here was my question. Who in the world would buy NVIDIA after running almost 100% in the last, I don't know, what was it, month? Right, an incredible gain of value. Who would buy up here? 100% return in a month. So you got the candle in your mind? All right, I'm going to point to it with a black candle, and you tell me if this was the candle that you thought. That one right there. Is that the one you're looking at? That was a candle that I was like, It wasn't that I was bullish. I was thinking to myself, I was like, okay, here's the deal. If we do bounce, this is the retest. So if you were going to go bullish, this is where you would have. And I was thinking about it. But I was like, well, here's what I'll do. Let it prove itself. Because again, I was like, I'm really skeptical on who in the world was buying NVIDIA at this point. And then if it pulled back and then bounced, I would have gotten in bullish. But then as soon as this candle showed up, let me clear those drawings really quick. Clear the drawings. As soon as the second shooting star candle showed up, this one right here, I was like, yeah. And then once it broke that low, that was it. Over at that point. So that gap is going to fill because, again, the sentiment. There's more people selling than buying. That was purely sentiment based on the gap on the daily chart. Now, if you were in the day trading room, you would have played this trade with us live. And if you follow us on TradingView, which is also free, you had the opportunity to more than likely take this trade. So let's let it open. And so here was the trade that we set up. So what I'll do is I'll put this link in the chat page just in case anybody wants it to kind of review it. Guru said screen has frozen. I hope it didn't freeze for anybody else. It might be an internet issue on your end, Guru. I think everything's okay on my end, but keep me posted, folks. If my internet dies, it's definitely a possibility. I have Comcast. So usually if it rains or the wind blows or a possum climbs a tree, my internet goes down. So on NVIDIA, this was the trade that we placed. And the reason that we got in bearish here is because this candle pattern was a tweezer bottom. A tweezer bottom, which was a very strong bullish reversal signal. So this tweezer bottom means it has the exact same lows to the penny. So my thought was if we break this support, we're going to go lower. So it broke it on the 5-minute chart. We retested the high of the retest. So if I come into the 5-minute chart, let me show this to you. So 15641 was our entry. So ladies and gentlemen, did I get in true or false? Did I get in on the retest or the breakout? Just go ahead and type it into the chart. Retest or breakout. I could have taken either one, but which one did I take? Took the retest. Exactly. I oftentimes take the retest. So I did a limit sell, and the high of this candle right there, the high of that exact candle was 156.45, which means I got the entry by 4 pennies. Now, honestly, that's not skill. That was just luck. I've seen plenty of times when we missed that trade. I traded well today. It was a great day. I did everything perfect. My timing was impeccable. I traded today like Gordon Ramsay drops the F-bomb. I got lucky. So that was a really, really good trade. It would have worked out phenomenal for anyone who got a chance to play it. But again, all of that analysis simply stemmed from the sentiment and the candlestick pattern. That was really it. Sentiment and candlestick pattern. Someone else asked a question. Give me a second, see if I can scroll up. Sorry, I'm just trying to, who asked the question? Cecilia says, why does that black candle indicate that you shouldn't go bullish? Why does that black candle indicate you should go bullish? I think Cecilia's talking about this one right here. So this candle, Cecilia, we're talking about this shooting star. So this particular candle has a lot of selling value, has a lot of selling pressure. It's a big upper shadow, and that's one of the stronger reversal candlestick patterns known as a shooting star candle. And again, since it's a retest gap, you want a stock to bounce off of the 10 EMA on the 5-minute chart. That's what you're looking for. So when this stock traded down to the 10 and gave me a bearish reversal signal rather than a bullish reversal signal, that was my inclination to wait, be patient, be calm, and not take that trade yet. So NVIDIA was a great day. Today was an over 2-hour day in the day trading room, so that was pretty exciting. Let's talk about the type of gaps really quick that you do not want to trade, because there are some. And you can still make money on these gaps, don't get me wrong, but they just aren't the best. They just aren't the best. So let me kind of give you an example. This today, CAA, type in a 7. And I don't expect a lot of 7s, but type in a 7 if you played or you were looking at CAA today. This was a gap that showed up on the gap list. First of all, since we're here, let's just talk about what type of gap it was. So let's do this. What type of gap is this today on CAA? I'm going to launch the poll. What do you guys think? What type of gap is that? Black candle gapping down. Black candle gapping down. I think you guys all know this at this point, so I'm going to close the poll in 5, 4. All you got to do is click a button. 3, 2, and 1. All right, so this is a little bit better. This was a bearish retest gap. Exactly. Bearish retest gap. Because remember, so those who chose bearish gap and go, remember it's all about the prior day's candle. That's the most important candle. So the prior day's candle was black and the stock was gapping down. Therefore, it was a retest gap. Now, let's see if it did retest. Let's go in the 5-minute chart. I'm going to talk about what type of gap this was. The stock did retest. You'll notice it did the exact same movement, right? It gapped down, traded up, came into the 10, started rolling over, but never did. So if you would have taken this trade, you would have lost. Let's talk about why. Does anyone have a guess? There is a specific type of gap that this was that I haven't talked about yet, but it is important to know about. These are a type of gaps I very, very rarely trade. Guru says, is it necessary that evening star should appear at the top, or can it appear anywhere on the chart? The top is better. Yes, if it's at the top, at a resistance, or on or near the 10 EMA on the 5-minute, it makes it much, much better. So CAA, unless I am mistaken, which is definitely a possibility, it was offering common stock. So it was a share offering. So think about this just logistically. If a stock has 1 million shares and they offer more shares on the open market, what's going to happen to the stock? It's going to get diluted in value, and therefore the stock's going to be priced lower, right? Does that make sense? That's just a fundamental, the more supply you have of something, the less valuable it's going to be. That's pure economics. So on CAA, this was a share offering. Go ahead and write down in your notes, don't trade share offerings. When we're in the trading room, I look at least a gap a day that's a share offering that I usually forget about, and the team that's in the morning room tells me, hey, Jeremy, this is a share offering, don't trade that. So why isn't a share offering a good gap? Because there's no one scared. No one is upset. No one's worried. No one's panicking, right? If they're shareholders, they probably got a shareholder email or letter or something in the mail that says, hey, we're about to have a common share offering. We're about to offer more shares or whatever. And so this is a share offering. Therefore, the stock price was lower and it didn't really work that great. Linda says, how do you know it's a share offering? That's a great question. So I use TradingView. Now, again, I'm not being paid to endorse TradingView. I'm just simply saying this is who I use. But the only way to know is I very, very rarely look at the news. But on TradingView, the news is very easily accessible in the bottom right-hand corner. Okay? And so I just saw it. It just says they're offering pricing for secondary common stock. So it was just right there in my news feed. I was like, oh, cool. It's a share offering. They're offering common stock. Boom. Not going to trade this gap. Now, a lot of you didn't trade this gap, but you will come in contact with a gap that you don't really want to trade, and that's one of them. Type in 1 if that makes sense. So again, it's going to come from the news. You will forget. There will be a time where you'll see a really good gap, and it will be a share offering, and you'll forget. You'll probably take the trade. You'll probably lose small on it. It happens to me sometimes when I'm trading by myself, okay? But that is one type of gap that you want to avoid. They look really good oftentimes, but they just... I'm talking the vast majority of the time they don't work out. Maybe 1 out of 10 times they play out. The other one was DFT. Here's another one today that was a bullish gap and go. Black candle gapping up. Now let's do a really quick trivia question. Would this gap have been better in your opinion if it opened here in red, here in purple, or where it opened today in black? What do you think would be the better gap? Red, purple, or black? Red, purple, or black? Red, purple, or black? Red, purple, or black? The answer is red. Yeah, answer is red for sure. Purple, I don't know what investors are going to think up there. That's a huge gap. Maybe they buy, maybe they sell. I really don't know. Black, well, it literally opened at black and it didn't really work out that great. Red was a great gap. Red would be a good gap because investors who are short are going to unravel at that price and they're going to buy to cover and the stock's going to continue to go higher. So black would have been, well, black is where it opened. So this one was some type of deal, some type of acquisition. So DuPont, ticker symbol DFT, was involved in some merger acquisition, share offering, selling news. And again, that's another type that you really want to avoid. So let me see if I can read this. Yada, 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 concerning whether the sale of this company to Digital Realty Trust is fair to shareholders. Okay, so it was this company being sold to another company. Is that fair for shareholders? So if a stock is involved in what's called an M&A, do you guys know what an M&A is? Merger and acquisition. Merger and acquisition gap, stay out of those if you can. Linda, same exact thing applies. How the heck do you know if it's a merger and acquisition? One of two ways. If the gap is huge, now again, when you're looking at the chart, remember I said which gap is better, this one or way up here? If you're looking at the chart and you're like, man, that's a big gap. If you're looking at a chart and the gap is just like astronomically large, oftentimes it's a buyout or a merger of some kind. Now, that didn't happen in the case of Baba yesterday, but either way, oftentimes it's some type of merger or acquisition. You don't want to trade mergers and acquisitions. Now, you can if you want. Obviously, there is a whole industry dedicated to trading these type of stock. What's the name for it? Oh, geez. Arbitrage, if I'm not mistaken. Arbitrage, which is the intensive research of determining if a stock is about to get bought out. Have you guys ever heard of that before? So there's a whole industry focused on just that. That's, again, the market rewards the specialist. People can specialize in companies about to get purchased. So anyway, there's nothing wrong with buying a stock if you think it's about to get bought out. That's fine. But I'm talking about day trading, right? This is literally called How to Day Trade in Real Life, Part 4. Therefore, if you're playing a day trade gap, you want to stick away from mergers and acquisitions. Is that fair? Type in a 1 if you're like, all right, that's cool. You're going to get a merger and acquisition and a share offering at least once a day. Seriously. They're going to happen pretty often, and they look like great gaps. This one would have been a bullish gap. When I was looking at it on the 5-minute chart, my brother Ricky was like, I'm looking at fading this trade. So I call Ricky my brother. I haven't met him yet. He lives in Australia. But here was DFT. And the analysis that I drew in this morning, and this is true, I said, hey guys, look to play it like this. Right, Ricky? I think I drew that exact rotation. Didn't play that though. Just said, hey, if you're going to play it, this is probably how you want to. And it did end up breaking down. The reason I drew it like that is because you'll notice this pre-market data had already rolled over, right? So all I did is I just drew on the screen the rotation, and I was looking at taking that rollover. Ed says most brokers have news window where you can put a symbol in. If there's a merger and acquisition, significant news, a short story will be there. That's exactly correct. Yeah, so that's a beneficial tool. Ricky says, yeah, man, perfect analysis. That was because you were there, buddy. If you weren't there, I would have had a terrible day. So thanks, man. Thanks for propping me up. Okay, there's one other one. I had a trader actually ask me about this, and I forget the name of the person who emailed me, so I apologize about that. It might have been you, Johnny. Clive. It was Clive. C-L-I-V-E. Clive will remember. So Clive asked me about Barclays. Sorry, I get about 150 emails a day. I was trying to remember who it was. This is another type of gap. Type in a 4.1 if you can see and notice that this stock gaps all the time. Let me see those 4.1s. You guys look on the keyboard like, okay, 4 period. This is called an American Depository Receipt, an ADR. So these are the 3 types of gaps you want to avoid if possible. So again, the first one was share offering, second, merger and acquisition, third, American Depository Receipt. An ADR is a stock that is traded 24 hours on all exchanges. If you're like, hey Newsom, I have no idea how to find that information out, it's real simple. Pull up the stock, and if it gaps every single day, it's an ADR. That's really it. So this stock gaps all the time. So the gaps don't mean as much because investors aren't scared. Remember, that's what a gap is. A gap goes, like people are worried or excited or they're doing something. There's a massive amount of people doing one thing or another based on a gap. And if the stock doesn't really gap technically, or they're used to it, okay, then it doesn't move anything. Wilson says, just like RBS. Yes, RBS. Is RBS an ADR, yes or no? Yep, gaps all the time. Don't worry about that one. Is British Petroleum an ADR? Let me get BP pulled up. Is British Petroleum an ADR? Yeah, it gaps pretty much every single day. What about Vodafone, ticker symbol VOD? Is that an ADR? Yep, gaps pretty much all the time. So now I'm not saying you can't swing trade these. You can swing trade these until your heart falls out. Go for it. But just day trading, the gaps mean a little bit less. So those are the 3 gaps that don't really mean that much. They're not that fantastic. And you should probably just kind of stay away from them. Let me know if I have any questions about that. Let me talk about one other type of gap that I had a trader ask me about. So this is nothing in particular other than me just helping out that trader. So this is the daily chart. And this trader lost some money on this trade because he was playing it as a bearish gap and go. It is a bearish gap and go, right? White candle gapping down. Who can read my mind? And let's try to figure out what this trader missed. And it's okay, right? I don't think it was real money. He was just practicing. You got to learn somehow. This is a great time to do it. So what did that trader miss? It's a tough one. It's not a trick question, but I'm wondering if you can read my mind. Sharon says volume. Great viewpoint, but the volume wasn't here yet because the volume is from today. So he was playing the gap early this morning. Wasn't a merger. I think Nick got it. Well, Nick is close. You're very, very close, Nick. I'm looking for a more specific answer. This is hard. I'm looking for someone to read my mind right now, which is not easy to do. It's also not a place that you want to be at. It's not a place you want to be in my mind. Adam, you're very close. You and Nick are very, very, very close. Anyway, he didn't scroll left far enough is what I'm trying to get at. He took the daily chart and only looked at about just a few months of data. He didn't really go left, right? So again, you can look at a daily chart, that's fine, but you want to give a little bit of data, right? Remember I said if you've never traded this thing, look on a weekly chart just to see what it's doing, right? Do you guys remember that? Because you do want to kind of look to the left a little bit just to see where is it gapping. Like, is there anything around here or no? So if you scroll left a little bit, and so that's only a year or two of data. That's not that far. Remember, I said look at about a year or two worth of data on the daily chart. And Adam, you're absolutely correct. Boom, right there. It gapped right into some support zones. That was the deal. Yes, it was a bearish gap and go. But this is one of those things where when you're playing a gap, you want to look for reasons to go, nah, I don't want to trade that one. Doesn't look that great. I'm not going to move on. Okay, so that was one other gap. Now let's go through another one. Big support, says Casa. Yeah, big support. Let's go look at ENDP. Who traded this one with me today? I took this one twice. ENDP. This was a really, really good gap. Let's talk about why, and I'll talk about how we traded it. I'm going to show you the loser, and I'm going to show you the winner. So first of all, on a 1 to 10 scale, 10 being the most bullish candle possible, how bullish is that candle yesterday? On a 1 to 10 scale. 10 being you can't get more bullish than that. All right. We're getting some numbers. I'm just looking for something. All right. Well, so here would be my recommendation. If you typed in anything less than a 7, you're welcome to message me, email me, or put it into the chat pane. Let me know why. Because even though it's out of resistance, you're absolutely correct. Absolutely correct. You're definitely out of resistance. That's at least an 8.963. It's close. The only reason it's not a 9 or higher is because it's out of resistance. But that's a very strong bullish gap. I'm talking if 10 is the strongest gap of all time. This particular candle had a bullish gap and go by itself, right? Between Thursday and Wednesday, it had a bullish gap and go. Look at the volume increase. You had an increase in volume. It made a higher high and a higher low. Did people buy there yesterday by the droves? And the answer is yes. People bought there like madmen. So when they bought there, my friends, did they lose money at market open? The answer is absolutely. This is what makes for the perfect bearish gap and go. I've redefined my definition a little bit. The perfect bearish gap and go is when you get a candle the prior day that is a bullish candle, a very, very strong bullish candle that makes a higher high and a higher low, and the next day people are trapped. Nikhil says, who are selling today? The people who are selling today is everyone who bought yesterday. That's who's selling. Everyone who bought yesterday is selling today because their stops are getting hit and they're losing money and they're upset and they're scared. So what time frame do you think that I was looking at ENDP on this morning? Yep, you got it. Looking at the 1 minute chart. So what I'm going to do is I'm going to walk you through my 1 minute time frame on this. All right, so let me take this off because this was my second trade. So I'm going to show you my second trade in a moment. So here's the 1 minute time frame, and this was pretty brutal. Okay, so 1 minute chart. Pre-market support right there. In fact, let me actually just hop over to a 5 minute chart. I'll draw the pre-market support for you really quick. Pre-market support. Okay, so here's the pre-market support. So notice this is the 5 minute chart, right? You had, a support level right there based on the high of that candle. And you had some pretty good bullish candles coming in here. And then it broke lower right there. So it started breaking pre-market support. So I said, game time. Let's do this. Hopped into my 1 minute time frame. And guess what I'm about to do, folks? I'm about to show you a loser so that you know. I want you all to just get ready for it. So when this candle came in, how long did I wait? Do you remember? I waited 2 minutes. Both 2 minute candles were bearish. So I was like, I need a bullish candle. Morning star reversal came in. Wasn't that excited about playing it bullish, so I didn't. So what it did is when the stock broke through support, what did I do, folks? Any guesses? I played the retest. I was looking to short it because it was a bearish gap and go. So my entry was the green line and my stop was way up here. It was a big stop, I know, but I have big stops in the early morning because it's very, very wild. Very wild. So I got in short on the retest. I shorted the stock right there, and literally 60 seconds later, I got stopped out. Good news is I didn't get any slippage on my exit. That was the good news. But I lost on that trade. Did I blow out my account, ladies and gentlemen? No. Did I cry? I mean, a little, but I mean, you know, men can cry. It's okay. I cried like a man, okay? If I cried like a grown man. Anyway, so I got stopped out. I lost an R. No big deal. So what ended up happening is, what time frame did I switch to after that on E and DP? Any guesses? Exactly. I switched to the 5 minute chart. I was like, all right, well, 1 minute's done. It's too volatile. So I gave it a few more minutes. And I was still looking at other trades at the time, by the way. There was a lot going on. So I was kind of swipping back and forth. But then this candle showed up. Is that a bullish candle? Yes or no? Yes, it is. Now, Chris, it has a big upper shadow, but it's still a bullish candle. Is this candle bullish? I would argue it's a little bit bullish, has a lower shadow. Then you have this bullish candle right here. So for the second trade I played was a breakdown below those white candles right there and place my stop right here, right above the high wave of this bullish high wave candle right there. And that was the setup. So it was still a bearish gap and go. I was willing to trade it again because it was going to break pre-market support and that candle. Now, did I know I was going to win on that trade? No, I did not. You can't let the fear of losing stop you from a trade, right? Take calculated risks and know what you're going to do. I planned this trade. Now, this might sound like a figment of your imagination, but I planned this trade for 15 minutes before it triggered. 15 minutes. Once this candle formed with a similar low and that white candle, I said, all right, if it breaks lower, I'm going to try it again. Then I got this candle. And then I got an inside candle. I love inside candles. And then we took it bearish. That was that. Other trade, really quick. Last one of the day, and then we'll get to the other content. Was AMD. Who played AMD today? I got lucky on this one. This was pure experience talking. That was the only thing. This was pure experience helping me out on this one. Just trading for 7 years, it'll help you. So Ricky says, what does an inside day candle mean? So this candle was also an inside day candle yesterday. Ricky, think about an inside day candle like water in a pot over a hot stove. Water in a pot over a hot stove. It's boiling. The pressure is building. So an inside day candle is pressure building. Right? Because it's like, I don't know what's going to happen. We haven't done anything. We have made no change from yesterday. Right? Here's an inside day candle right there. Look at that cute little 2-day pennant pattern. You got a bullish gap and go out of that pattern. That's some good money right there. Look at this inside day candle right there. Inside day candle, breakout. That's some good money right there. Inside day candle, right there. Inside day candle. I love inside candles. Inside day candle. They happen all the time. I call them the 2-day pennant patterns. Miss Avery, that's a great question. We talked about that in class 2 and in class 3. As far as the risk, we talked about 1% of your account value is how much you're going to risk per trade. 1%. If you want me to send you class 2 or class 3, email me. I'd be happy to do that for you. Very valid question. Risk is key. So here's how I played AMD. Let's go to the 5-minute chart. Oops, I'm sorry. White candle gapping up. What type of gap is that? It's a retest gap. So am I going to take the breakout? Yes or no? The answer, when we come back after these series of commercials. So it was a white candle gapping up. It was a retest gap. I'm not going to take a breakout on a retest gap. Who would do that? I don't know. So here's the 5-minute chart. I'm going to go to the pre-market. And pre-market. Here we go. Here's the pre-market. Give me a 7 if you can see a very clear and obvious resistance. Luke, I'm about to answer your question right now. He says, how do you cope with time pressure? I'm always stressed analyzing time. Wake up earlier, my man. That's one way. Wake up earlier and plan farther ahead in advance. Right? So if you're getting stressed out, there's only 2 or 3 things that are happening. You're either focusing too much on what's happening now, or your risk is too big. That's one of the 2 things. If you're stressed out about the market, either you have too much risk, or you're looking at it too much in the present and you're not thinking about the future. So AMD, this was a bullish retest gap. So Luke, to give you an idea of what I did in this situation, what I did is I did not focus on what's happening right now. That's been the theme of the day trading program. What I did is I said, all right, it's a bullish retest gap. Here is the resistance. Who can tell me what my brain was thinking at that time? Now, for those of you who were with me in the morning trading room, don't spoil the secret. What I wanted to do, yep, I wanted it to break above the resistance. And then do what? I wanted it to break above the resistance, and then I was going to get in on the retest. Yeah! Now, Luke, I planned this 10 minutes before the market opened. What's important to know is, did I know for sure that AMD would break out above resistance? What do you think, Luke? Did I know that? No, I did not. No, I had no idea. I did not know that for sure. So it could have just gone straight down. And if it went straight down, what would I have done? I would have traded it. It would have met my plan. You know, I was like, I want this to happen. And if it doesn't happen, I'm not going to let the market whip me around. I'm going to create a plan of what I want it to do. So when it broke above this resistance, is this candle, give me a rating again, 1 to 10. 1 to 10 of bullishness, this candle we're looking at right now. I know it's a little hard to see. Let me try to zoom in a little bit more. 1 to 10, bullish as can be. What do you guys think? There's no way you rank this lower than a 9. It's impossible. It's a this is 9.4235. My man. You got it. That is exactly what I was thinking, almost. Yeah, 9, and it's solid. It's a solid candle. So what did I do? I followed my plan. I said, okay, if it pulls back here, I'm going to get in. Where was my stop? Any guesses? Go ahead and look at the price on the chart over here and tell me where would I have placed my stop. Give me a number. Can you kind of throw out? Right here, low of the day, 13 even. 13 exactly. So if you said 13, pat yourself on the back. You've watched me trade before. It's 13 exactly, yep. Now, here is the next candle that came down. Was I scared? Was I scared? A little bit. Just a smidge, because I just lost on the other E and DP trade. I was like, But I was like, you know what? My stop's in place. Whatever. If I lose, I lose. Who cares? No big deal. Luke says, so the key is to let go of the trade if your plan doesn't work out, even if you analyze the gap correctly. Of course. Because if you don't, Luke, then the market's in control, bro. You want to be in control. You can't control a controlless thing, right? You can't control the market. You can only control yourself. So you say, hey, market, this is what I'm going to do. And if it comes up with a plan of its own, you cancel that plan, and then you create another plan for the future. Because what a lot of people do is they go, oh no, it didn't do what I wanted it to do. What's it doing right now? And then they get into a trade that they didn't plan, and what happens? You lose. Scott says, did you get 1320? That's a great point, Scott. Now here's the good news on this trade. What order did I fill into my broker trying to get the pullback at 1320? I did a limit. Oh, you guys are getting good at this. I did a limit buy because I wanted to buy it on the retest, not the breakout. So my entry was 1320 limit buy by 13. 20 cents of risk all day, all day, all day. Now the cool part is, literally as I was typing this into the broker, the bearish candle was screaming down. So I actually got filled at 13.16. So I saved 4 cents. Not bad. Which was good news, because then I was like, well, if I lose on this trade, I'm automatically going to lose less than an R. Pretty cool. Pretty cool, fam. And then what proceeded to happen from there was just pure luck. It traded down a little bit. You know, you got that candle, didn't hit my stop. Yada, yada, yada. It was looking really good. I was like, all right, sweet. I'm going to be a rich man. And then these candles started coming in. So I took my stop and I did what? My stop went from here to here. And then when I saw this candle, my stop went to here. And then the next candle. Ricky, is that an inside day candle? Yes or no? It's an inside candle. So what I did was I used 7 years of intuition to exit my trade there. Most of my beginning traders, I will tell them to just hold the stop where it is. Because you can't build intuition until you're in the market for a long time. Avery says, were you buying or shorting stock? This was buying the shares of AMD. I would not purchase options on AMD. Yeah, so this is day trading shares. So I moved my stop manually to 1320. And then I exited when I saw that inside candle. And then that happened. Now again, that was honestly luck. I was on fire today. Let's just admit it. I crushed it. Okay? It was a good day. I very rarely do as good as I did today, but I got out perfect timing. I say perfect. Sure, I could have gotten out at 13:30 or something, but anyway. Ricky says, hey man, on an option trade, how do you work out what the option price would be on a stock price to have the stops put in? So Ricky, you have to look at the option pricing chart. Email me that. I'd be happy to help you look at that through IB. So anyway, that was AMD. That was the trade. So really what I want that main takeaway to be from AMD and from NVIDIA and from the things we're looking at is, just like Luke was asking earlier, it's very, very hard not to get stressed in day trading. The only way you can truly lower your stress level is by creating the plan for the future, determining what you want to do in advance, and risking smaller. Type in a 1 if no one here would care about losing 20 bucks. Type in a 1 if no one cares about losing 20 bucks, like whatever, right? If your risk, if your heart is beating out of your chest when you're in a trade and you go to sleep at night and that's all you can think about is how much you might make or how much you might lose, if you're worried about what's going to happen onto the stock, if you're day trading and you literally can't get up and walk away from the computer, you are risking too much money. It's going to be a psychology thing at that point. And psychology in trading is huge. It's massively important. One of the things that's going to help you with that the most is having a trading plan. So we are going to build a trading plan right now. Here, hold on, let me see if I can do the Joker impression. And here we go. All right, day trading plan. Day trading plan. Tim says, I'm on the edge of my recliner. All right, sweet. Nick says, I'm working 12 hours a day. I trade in my break, so even if I want, I can't overtrade. I like it. 12 hours a day, man. That's not bad. I remember my first part-time job. I'm just kidding. I'm just joking, man. That was funny. So day trading plan. Number one, what we got to talk about first is a risk. Let's just get that out the way. Jill said 90 hours this week, right, Jeremy? I think we're on hour 84 at this exact moment in time. Yeah. Risk. So how much does your risk equal? Now, make this a number that you're comfortable with, right? I said earlier in class 2 and 3, 1% of your account. I had a trader who had $1 million account contact me a few months back. He's like, hey, Newsome, so 1% is $10,000. I think that's a lot of money. Ooh, good call, Avery. Thank you. I appreciate that. Yeah, let's make this a little bit bigger. In fact, let's just do this. Make it nice and large for everybody. So he asked me, he's like, Jeremy, 1% of my account, that's kind of big, man. It's 10 grand. And what do you think I said to him? What do you think I said to him? I was like, lower it. Lower your risk. You can make your risk small. 1% is, just the rule of thumb, which is a terrible expression, but you guys know where the rule of thumb comes from? I won't go into it. It's going to take me down a weird path. Anyway, you can risk however much you want, but make it a small amount. Here's the thing, and I'm going to tell you the next 30 minutes is going to be all trader psychology, okay? Trading plan and trading psychology. The overall goal is, when you're trading, you do not want to be stressed out. You do not want to lose money, and you want to last in the markets long enough so that you can learn something. In order to become a profitable trader, you have to become a better person. Okay? I know that sounds weird, but it's true. The reason that most of us have a job and don't get fired from that job is because we have a set of rules and we follow them. Would you all agree on that? If we all type in a 1 if you're employed right now. I know my boy Nick is. He said he works 12 hours a day. Type in a 1. Type in a 1 if you have a job. You get paid by somebody. Now, type in a 1.3 if you know exactly how to get fired from that job. You can get fired from that job tomorrow. You know exactly what to say and who to say it to. Or what to do. You get the point. In trading, who is your boss? You are. Okay? Are you going to hold yourself to your own rules? And the answer is, not usually. Most traders don't. Most traders do not hold themselves to their own rules, unfortunately. And the traders who do make money. The traders who don't, Avery, what happens? They lose money. And the better part is, most traders would follow their rules, but most traders don't have rules to follow. They never created them. So we're going to be doing that right now. Risk, 1% of your account. Number 2, no more than 2R loss on any given day. So remember, your risk equals 1R. 1R is 1% or however much you're trading. So rule number 2 is no more than 2R loss on any given day. Pretty simple. Next, focus on insert type of gap. Pick 2 max. Whoa, what? Jeremy, you said that there's 4 or 5 different types of gaps. What's going on, bro? What you doing, man? You're putting handcuffs on me. Sorry. The market rewards the specialist. If you want to know the type of gap that I'm the best at, go ahead and guess if you want. What type of gap that I'm the best at? You can type it in. There is one type of gap that I am the best at, and I'm going to go and look at that gap next. The bearish retest gap. You got it correct. The bearish retest gap. That is my bread and butter. That is my go-to. 90%. 90% is bearish gap, bearish retest gaps. So while we're talking about, let's go look at one that literally would have changed your life if you traded it correctly. I know that's really like that. Man, that's a big statement, Newsom. I didn't take this trade, so my life has not changed. But I do have a T-shirt. It has a real life trading logo. And I don't think this is it. No, this is not it. On the back it says, "One candle can change everything, including your life." This is one of those situations. So what type of gap was this on the daily chart? Black candle gapping down, bearish retest gap. This is it. Right here. This is fire. Look at that. Gapping below the 20 and the 50. Oh my gosh. Now, there's a terrible reason I couldn't buy this. I need you guys to help me out with this one day, maybe. I'm kind of joking, kind of serious. Here's the 5-minute chart. I mean, a one-legged blind squirrel playing football with the New England Patriots with a sledgehammer could have taken this trade. I mean, that is, oh geez. Look at this retest. Ladies and gentlemen, if that doesn't give you chill bumps, you are in the wrong profession. You should not be a professional day trader. Type in a 1, everyone here. I know you got goosebumps from that right there. I did. When I saw that, let me tell you why I didn't trade it. Let me fill you in, shall we? Let me do so. Now, we did have some traders take this, but I couldn't. And it's a real easy reason. Here's my entry. Here was my stop. I did would have been a stop limit. That's how I would have entered the trade. Avery, this is shorting shares, not trading options. The options on this one are terrible. How much is the risk on that trade, folks? What's the risk size? 66.05 by 66.15. In the trading room, when you guys join that, we're gonna type it in like this: 66.05 by 66.15. That's how I'm gonna type it in. That's 10 cents of risk. Do you guys remember what I told you my R was? 450. Okay, 450 divided by 10. I know this number very well. 4,500. Multiply that times 66, and guess what you're gonna come up with? Oh no! Right at 300K to take this trade. Now, I've told you guys before, I'm not a millionaire, at least not yet, and I don't care to divulge that information. I will be. I'm going to be a decamillionaire at some point very soon. I just believe that, maybe not, I don't know, it doesn't matter. I'm wealthy in my heart, that's all that matters. Quickest way to get wealthy in the stock market, count your blessings, right? So this trade was a lot of buying power. And in recent memory, I can't remember a time I lowered my R in order to take the trade. That's probably what most of you were thinking about. Well, how come we just didn't make it $100? I should have. That would have only been 1,000 shares. That would have been 66 grand. Easy. I almost paid that in taxes last year. So, really good trade, phenomenal retest, incredible opportunity. You could have taken this retest 2 or 3 times, and that would have been like a 7R trade. Something goofy like that. So I couldn't take that trade because of buying power. That's going to happen sometimes. Sorry. Luke says, why not options in? The options were terrible on this one. They don't have weekly options. Only had June. The bid-ask spread was bad. You only trade weekly options on certain stocks. All right. So let's get to the next one. Next rule. Focus on only 2 types of gaps. Max 30 trades per month. Uh-oh! What's happened on that one, Newsom? What's going on? 30 trades a month? I can't feed my family. Ladies and gentlemen, less is more in trading. That's all I'm going to say about that. If you can't trade the market profitably with 30 trades, do you really think 300 is going to help you? I mean, that's about, a trade a day. So when you're trading, when you're starting out day trading, less is more. Don't worry about the trade. If you're missing it, if you can't catch it, that's okay. And that's all I have to say about that. Sometimes there's just not enough rocks. Number 5. If playing the retest gap, wait for a morning star reversal or evening star reversal that touches the 10 EMA. Oh man. If playing the retest gap, wait for a morning star or evening star that touches the 10. This is an example. If you want to copy my plan, copy this plan word for word, you're more than welcome to. If playing the retest gap, wait for a morning star or evening star that touches the 10 EMA. All right. Most of your trades should be after the first 20 minutes of the day. Number 7, once I place a trade, I will walk away from my computer for someone give me a really painful amount of time that you think is incredulously arduous. An amount that sounds like you'd rather have hell freeze over before you wait that long without being in front of your computer. Avery says 2 hours. That is arduous. Let's do the difference between 2 hours and an hour. Let's do 90 minutes. Now, this is a fun one. This is really easy to measure. Marta says that's the hardest part. Not watching like a hawk and not panicking. It is the hardest part, and that's why it's rule number 7. Type in a 1 if you could imagine me being a pretty spontaneous, high-energy person who would often break rules a lot. Yeah. It's true. Okay? When I first started trading, day trading, you all know I was the worst trader in the world. I've mentioned that. No one could have been worse than I was. And after I blew out 2 or 3 or 4 accounts and I started asking mentors and coaches and traders, why is this happening to me? I heard what I didn't want to hear, but it finally sank in. Jeremy, you're not disciplined enough. You're one of the best traders I know, but you have 0 discipline. So, okay, how do I become more disciplined? And that was one of the times where And very, very, very few companies, actually, I don't really know of any, that will share a actual written trading plan. You'll hear people all the time say, follow your plan, it's important, but no one ever shows you what the plan is. Isn't that weird? Anyway, so this is exactly what my plan looks like, almost to the T, just a bunch of rules of things that I can't do. So this was a very easy one for me. When I first started trading, I would literally be away from the computer for 3 hours. I would place the trade, I would set my stop, I would set my target, I would do what's called an OCO order. OCO stands for order cancels other, which means you can have a stop and a target at the same time. And if the trade comes down to the target, boop, it'll cancel the stop. If the stock comes up to the stop, boop, it'll cancel the target. Limit says, how did you do that? It was tough, man. But I went to the gym a lot, I read a lot, I worked a lot, I did a lot. Ricky says, what if 3 hours is 3 a.m. for us Aussies? So it's tough, right? So, I mean, as far as, traders who are in Australia and international traders, you can develop a different time frame, right? Make sure it works for your lifestyle, if you have kids, don't make them starve because you're trading or whatever. But you want to leave the computer. You want to get away from the computer. So Avery, this is again on stock, not talking about options. So you want to be able to walk away from the computer. You want that discipline, right? If you're in front of the computer the whole time, if you're in front of the computer, you're going to get dragged under the water. The market's going to control you. You don't want the market to control you. So this is a big rule. Once I place a trade, I will walk away from the computer for 90 minutes. Is it going to be hard to follow? Oh yeah, that's a toughie. That's a real tough one. Here's an even harder one. I must plan my day trade in writing at least 10 minutes before it triggers. What? How is that even possible? You've seen me do a few examples where you plan a trade and you write it down. Usually you can write it down on a charting software, you can write it down on pen and paper. For me, it's actually really easy because I get to write it down for my traders in the trading room that we trade together. And I give it 10 minutes, I got all the time. I'm all the time thinking what's going to happen minutes from now, not right now, but later, right? That's a very hard rule to follow, believe it or not. That's intense. But you got to understand, making money is not the most important aspect of the market. Can we all agree on that? A lot of people think it is, but it's truly not the most important aspect of the markets. The markets is all about learning how to control yourself. And once you can control yourself and you have the same discipline, consistency, and approach that you might have to your job or a job that you had in the past, once you develop that and you can apply that to your trading regimen and you become so hard and fast disciplined that if you say something and you do something and that's just a fact, that's just the way it is, that's just the way it is, your trading is going to be magnificent. It's that discipline of not caring about losing, knowing what your risk is, planning in advance, not risking more money than you can handle, and letting it take a long time. The best way to get rich is to get rich slowly. If you're not already monetarily very well off, good luck. It's going to take you a while. I'm sorry. A lot of people are like, what? It's going to take me 3 years to make 10 grand? Yeah, it might. But would you rather take 3 years to make $10,000 or lose all of your money in 2 months? Your call, right? It's going to take time. But think about, oh my gosh, 3 years is nothing. 3 years is brutally short in the whole grand scheme of things. I mean, how long do we waste sleeping? For me, not very much. I'm just kidding. I'm getting better. I'm getting better. Right? my girlfriend's here. I'm getting better at the sleeping thing.
Every time I wake up, you're awake.
But what I'm getting at is the overall objective of trading. If you want to master this, the biggest quote from tonight, if you want to master the market, you have to first master what? You have to master yourself. Know your demons, know your flaws, know your weaknesses, be honest about them, and write a lot of rules in your plan that specifically say, don't do this. Do not do this. For example, I didn't go bullish on a single day trade for like 2 years. Brand says, controlling the ego. Oh, that's a big one. That is a big one. Don't do stupid stuff, says Santa. Yes. Right? Don't get mad. Don't get angry. Don't have a rage of outbursts. Don't get upset. Don't care. Money is endless. Money is boundless. Money is plentiful. It's all there. Add enough value to this world, you'll get enough money. Become the person you need to become in order to trade successfully. If you're not successfully trading right now, figure out what internal stuff that you need to fix and fix it. It's harder, I know, it's not easy, but trading is simple but difficult. Okay, so number 9. Does anyone have a rule that they really like? I have one that I'm going to add really quick, but does anyone else have a rule that they think is like, this is the rule? I love this rule. First person to write in would probably get it, but I'm going to go ahead and maybe that'll be for number 9. Steve says, don't be stupid. That one's a harder one to quantify though. I will say this, you need rules that are quantifiable, like did I do that or not? If you say don't get emotional on a trade, you can't justly measure that, right? Does that make sense? Give your rules in your plan that are quantifiable, like metrically. Did I do this? So for me, if I say do not chase a trade, how do I quantify chasing a trade? If I ask the question out loud, am I chasing this trade? That's how I know. Okay. Number 10, a good rule. If you play a retest gap in the first 10 minutes, in the first 5 to 10 minutes of the day, exit at 1R, especially if this is your first trade of the day, because it will retest. Hashtag duh. That's one of my rules. Exactly, Ricky. That's a great rule, man. Okay, if you play a retest gap in the first 5 to 10 minutes, now I said the majority of your trades will be, but sometimes you'll just have a great trade. Exit all at 1R. Is that quantifiable? Absolutely, right? It's quantifiable. What if you made 1 R a day? That's the goal that I'm after, folks. I'm here to make an R a day. I wish I was like my brother Santi, who makes like 100 R every week. I wish I was like you, man. One day I'll get there. But until then, I'm just going to have to keep doing what I'm doing. Paying Uncle Sam all these capital gain taxes. All right, if you play a retest gap in the first 5 to 10 minutes of the day, exit at 1R. No more than 2R loss on any given day. No more than 5R loss on any given week. No more than 7R loss in any month. That is a tracking month, meaning, you know, if you're down 5R in any specific Monday through Friday period, you're done for that week. And if you're down 7R and it's only June 15th, I'm sorry, shut it off. This is not your month. Don't lose more. Now, for the good one, we got about 5 more and then we're done. It's only 13 rules, it's actually pretty easy. If you are up more than 2R in the first 25 minutes of the morning, take it all and be done for the day. Boom. What? How often is that going to happen? Not very often, at least not for me. But again, I'm not that good. As far as the day traders here in the chat pane, I'm in the lower echelon. It's happened to me a few times, like 7 maybe, but it's a great rule to have. How many times have you been profitable and you gave it all back? Write a rule. Remember, these are examples. Honestly, you can copy this verbatim if you want. It's a great plan. We got 2 more things to add and then we're done. Only 2 more. Okay. You can write this verbatim, but you're welcome to take your own spin on it and get really, really close. So if you're up more than, one of my plan was if I'm up 3R in the first 30 minutes, that's actually my rule currently. So if I'm up 3R in the first 30 minutes, I'm done for the day. If I have more than 4R by noon, I'm done for the day. Deborah said, did I miss rules 11 and 12? Maybe, but I'll copy and paste this and see if I can fill it in the chat pane. And of course, you can also email us for me. You can email me and I'll put it in the I'll put it on the website and you can email me if you need it. If you're watching this from YouTube, click in the description box below and you'll get a link to our website. You can click it and you can get this link. I'll post it in there. All right, so this is a big one, right? So make sure you're profitable because again, the folks, the point is, ladies and gentlemen, you want to make money quickly. So if you're up an R and it's only been 30 minutes, is it going to get better from there? Maybe, but it could easily get worse. Right? So if you're up an R and you've only been trading for 10 minutes, all right, you did your job. Have a great day. Get out of here. Could you make more? Sure. Could you lose that 1R? Yes. You don't want to lose that R. You want to protect that R like it's a 6-pack of Bud Light on a hot July afternoon. Those are your beers. You're thirsty. You need to be quenched. So keep them around. Keep those R's. Protect them. Seriously. Right? If you're up an R, don't give that all back. No, no, no. Because if you can have a positive carry into the next day, that's going to change your mentality, change your mindset huge. Joshua says, does rule number 13 apply to Forex trading? Sure, if you want it to be. If you're up more than 2 R's in the first 25 minutes of your trading, boom. Because it might not be morning, it might be afternoon. Okay. So here's the best part. Pain, pleasure. Pleasure. Reward yourself and others when you follow your plan monthly. So every single month that I follow my plan and I'm profitable, which here's how you know if you follow your plan. If you're not profitable, you didn't follow your plan. It's just that simple. Reward yourself and others when you follow your plan monthly. I take trips, I travel, I buy things for people. I'm generous, I help. That makes me happy. I really don't spend that much money on myself. I never have. Maybe one day I will, but I usually just give all my money away because it's going to come back, right? I don't care. It's just money. Money does not equal happiness. Money does not equal wealth. You can be monetarily rich, but emotionally poor. You know? So, pain. What's the pain? The pain is very simple. If you break one singular rule, ever, on your birthday, Jesus' birthday, it doesn't matter. If you break your plan, what are you going to do? And this has to be something that's actually painful for you. Something that you do not want to do. Right? You want to do something that's literally and physically arduous. Don't say something like, I'm going to run on a treadmill for a mile. You should more or less do that anyway. Okay? I don't like Brussels sprouts, right? If you guys like Brussels sprouts, don't eat Brussels sprouts as a pain. One of my pain is I will eat Brussels sprouts and beets covered in mustard for my only meal for 3 days in a row. Plus, I won't eat meat. Plus, I won't have any alcohol. And I won't watch any sports for 3 entire months. That's my pain. It's terrible. For most of my guys out there, be a vegetarian for a month. Welcome to Suckville, population U. It's not fun. Now, if you are a vegetarian, don't do that one because it's going to be really easy. If you are a vegetarian, maybe you have to clean the entire bathroom with a toothbrush. You know who I'm talking to. One of my coaching students just had to do that 2 weeks ago because he broke his plan 2 weeks into our coaching program. And you know what he did today? He made 22R on Tesla. True story. So, what is your pain? Something terrible. Put it in here. And then, honestly, if you just write it down here, that's not going to do anything for you. You have to do it. If you break your plan, I have countless hours of videos in my collection of people breaking their plan and all the terrible things they have to do. I got everything from waxing legs to waxing chests to being a vegetarian. What's that? Yeah, wearing dresses, putting on makeup, being a vegetarian, donating. I had one lady who had to donate an entire closet of her shoes, right? So there's all kinds of stuff out there. If you need help creating a plan or need help with your pain, email me. Let's figure out a way to do some coaching together, some one-on-one activities, and I'll figure out a way to help you with that. But that's really going to be the main course right now of the plan. That really is about it. Now, there will be some time. So usually what I do is I create, like when you create a plan, do it for a month. Go back, look at your results. If you lost money, you broke your plan. Sorry. Do your pain and then make it worse next time. All right? So it just initially started out with me eating beets, and then I started eating beets. Started breaking my plan, so I had to make it worse and worse and worse because you want to be more afraid of breaking your plan than losing money. That's how bad you want this to be. You want to be more afraid of that than losing money. So do this for a month, go back, and then measure. Avery said losing money is painful in itself. No, 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 no. Don't make it about money. Should never be about money, ever, ever, ever. Because the fact is, it's going to happen. You will lose money on some trades. Don't link pain to losing money because losing money is a fact. It's going to happen. That's like saying every time it rains, I'm really upset. Or every time the sun shines, I get really, really, really upset. It's like don't make it about money. Don't make losing money painful. Don't hold on to it. Right? That's a great point that you brought up, Avery, but a lot of people, they hold money. They hoard it. They try to control it. They don't want to let it go freely. And so when they lose it, it's painful, right? It's like getting ripped out of their clenches. Let money go. If you love it, let it go. Let it be free. Right? It's a weird psychology, but you gotta trust me on this one. The less you care about your money, the more you'll probably get. If you're always scrimping and saving and holding on to every little last cent, and every time you lose, no, you lose that money, it's going to be a visceral impact, and then that brain connection is going to be, when I lose money, I'm sad. So are you going to lose money when you day trade? Yeah, there will be days and sometimes weeks where you'll be totally red. Just last Friday, I was down 4%. My R is 2%. So I was down on my trades. I was down in the red. Didn't care. What's my plan? Let's do it again next day. Now I'm up. So I had a 4R swing. So I'm at 4R, so like 8R swing. 8R swing in a month. Week. Not bad. Don't worry about the money. Let it go freely. If you hold on to it too much, every time it leaves you, you'll feel that pain anyway. Maybe that'll help. I hope it does. Right? But you don't want to link pain to something that's guaranteed to happen. Just like if you said not trading the stock market is painful, or if you say not trading is painful, or if you say what's another one? Being wrong is enough pain for me. I had someone say that. I'm like, dude, don't try to give me a weak excuse over here. He was like, losing on a train's painful enough for me, Jeremy. I was like, get out of here, dude. That's gonna happen. Like, that's a fact. That's not painful enough. I went to Hawaii in January and worked out with a Marine for a month. And I went to a Marine gym. I know what pain is. Those guys are brutal. By the way, for all my veterans out there, thank you for your service. I was at Camp Hickam Is it Hickam? Fort Hickam in Hawaii, Air Force Base. And there was a bunch of Marines there, and we're talking about this whole pain and pleasure thing. Get inside the mind of a Marine, you'll know what pain is. Okay? All I'm saying is, right, you can't give me something, it's gotta be something so miserable that you do not want to do it. You would rather lose money than accomplish that. Alright? Sharon says, do you have a trading journal format that you can track everything that you can be sure? Yep, I do. So actually, let's go ahead and bring out the good news, shall we? I think we got that. If you want a copy of this, email it to me or let me know. Type in a 1 if you are ready for some good news. Throw a 1 my way. I want you to be really close to your chat pane. I want to make sure you're here because I'm about to bring the good news. Now, most of you already know what the good news is. I kind of let the cat out the bag. Sorry about that. If you want to trade with me, Brad and LaToya, next week is the free open house for every single person on this planet. I have bought enough webinar space for as many people can be there. So I'm going to put the links in the chat pane right now. These links are live, meaning if you click on them, you will go to a room where no one is at. So this is the afternoon room that I'm posting in the chat pane right now. If you're watching this recording and it is after the date if it's after the date June 16th, 2017, email me for the next free week. We only do this twice a year. We do it because, number 1, I'm a terrible salesman, and number 2, I don't want to sell my product. I want to trade with people. So this is the only time that I let people in there for free. I don't even do a free trial. I have business people tell me all the time, Jeremy, you should do free trials. You should do like $1 membership. You should get people into the room. You get more. That's not my goal. My goal is not to make money through business with real life trading. I can do business with other things. Okay? So the entire week, June the 12th, 13th, 14th, 15th, and 16th, this is your time to be in the trading rooms for free all of next week. The morning trading room starts at 9 a.m. Eastern Standard Time, 9 a.m. New York time. 9 a.m. New York time, Monday through Friday. Monday is going to be Mentorship Monday. Let's blow the doors off the webinar. This is super exciting news. I'm really pumped to trade with you, right? So 9 a.m. to 2 p.m. New York time is the morning day trading room. As you know, the market opens at 9:30, so we're there 30 minutes before the market opens. And then in the afternoon, 5 to 6 p.m. Eastern Standard Time. For this week coming up, I'm going to record over 8 hours of content. I'm going to give you so much content you probably aren't going to be able to digest it all. You're going to wonder, how in the world does this dude do everything? I can tell you why. I have an amazing team and an incredible group of traders who are there to support me. I'm just a dude with a big nose who talks a lot. So, for me personally, it's going to be an honor and a privilege to welcome each and every one of you to be there. And again, I am recording this. So I will be sending you a lot of the afternoon classes because every afternoon is recorded. I've recorded every afternoon class for the last 2 years. Okay? Marta says there's a link to both the morning and the afternoon rooms. Yep, I posted them in the chat pane below. Right? So feel free to use those links next week. If you have any questions about that, you can email me over the weekend. I just sent out an email as well, multitasking. It hit your inbox while we were chatting. So if you're like, oh, I don't know what to do, it's also in your chat pane, ladies and gentlemen. So I'm really, really pumped to trade with you because here's what we're going to accomplish. We're going to accomplish the fine art of trading as a team, as working through step by step the trade plan, the strategy, the approach, and this is the best trading room that you will have ever attended, guaranteed. It is the best. I've created it that way. I've made it the best. I have been to every trading room that I personally know of on the planet, and mine is the best. All right, ladies and gentlemen, so you know the goals, you know the objectives. The morning trading room starts from 9 a.m. to 2 p.m. Eastern Standard Time, Monday through Friday. The afternoon room is 5 to 6 p.m. Eastern Standard Time. There is no better place to be on the internet than this particular trading room, especially for this week. It is free. Invite your friends, invite your family, your loved ones, anyone you think would want to benefit from this. It's an enriching, educational, fun, fast-paced, talkative, jovial, incredible environment. Remember, think about the power of proximity, right? You are the people that you hang out with. So imagine if you hang out in a trading room with 20 or 30 incredible, profitable, generous, spirited, loving people. You're likely going to become a profitable, generous, spirited, loving person, right? There is absolutely zero chance that I can do this without the support of each and every one of you, right? Our mission at Real Life Trading is to enrich lives. So if you're not there, I'm not able to reach the people that you will be able to tell other people about. I need you there. Sign up. It literally costs you nothing. So show up, tell people. I'm really pumped. Thank you so much for watching these day trading programs. If you have any questions, I'm pretty sure you know my email address by now. Jeremy@reallifetrading.com. Ladies and gentlemen, boys and girls from around the world, you were phenomenal. Thank you, thank you, thank you so much. I love you. Have a great and wonderful rest of your day, night, week, year, whenever you're watching this. And until next time, remember, love life, live life, and trade it. I'll see you later.